Yeah. Hi, hello everyone. I wish a good day to all the viewers. So now we are in discussion of profits and gains from business or profession, in which in yesterday's session we have completed part 1 and now we are entering into part 2. So in the past session we have completed till section 32, what are the deductions available under this head, and now we are going to enter for section 33. So what does this section deal with? Completely regarding depreciation. This section deals completely regarding depreciation. So in depreciation, what are the topics to be learnt? What are the conditions for claiming depreciation? What is the manner, the format for computing depreciation? How to determine the actual cost to the assets which we are purchasing? It might be building, furniture, plant and machinery, whatever may be. We are going to make some additions. So what are those additions we have to see? And rates of depreciation, what percentage is eligible for depreciation? And next, problems on depreciation. That means here we are going to mention some cases. Total 8 to 10 cases we learn here. By learning that aspect, we can easily know the concept of block of assets. Anytime we forget the concept of block of assets, if we learn those special cases, automatically we can remember. And additional depreciation, along with normal depreciation, in certain cases additional depreciation is also eligible. Unabsorbed depreciation, when the depreciation exceeds the business loss, then unabsorbed depreciation has to be separated. Why to separate and all, we will have a discussion there. Depreciation in case of power sector units. So generation or distribution of power generating units, power plants. For them, they can claim depreciation on straight line basis also. Usually in case of block of assets we follow WDV method, but in case of power sector units only straight line method is also permissible. So if straight line method is opted, how to compute the depreciation, those aspects we will discuss there. And business acquisitions, when amalgamation, demerger, transfer of business is there, so how to compute we will see there. And in certain cases, notional cost instead of the actual cost, here I have said that actual cost should be taken as the asset value, but in certain cases instead of actual cost we will take the notional cost. So what are those cases will be seen there. Like this, total 10 aspects we are going to discuss. So first, beginning with number 1, conditions for claiming depreciation. So first topic, conditions for claiming depreciation. So total 4 conditions will be specified here. So simple conditions, let us just learn the aspects, and then once it was known, then we will go for the special cases. So depreciation is available on block of assets. Usually in books of accounts, for each individual asset they claim depreciation. But in case of Income Tax Act, what they have specified here is you have to claim depreciation on the block. What do you mean by the term block? It should be same class of assets with the same percentage of depreciation. So 2 points have been specified here, same class of assets with same percentage of depreciation. For example, on furniture 10% depreciation is permissible. On building also 10% depreciation is permissible. Whether these two can be considered under a single block, answer is no, because furniture is of movable nature, building is of immovable nature. So that is why they both cannot be classified into a single block. Not only same percentage of depreciation, we should also, it must be a same class of assets also. One more example, on computer we can claim 40% depreciation. On refrigerator or fan, other electronic items, we can claim 15% depreciation. Computer is an electronic item, refrigerator is also an electronic item. Can we classify both into a single block? Answer is no, because here even though they are of same class, depreciation rate has been differed. So when can we classify under a single block? It should be a same class of asset and also same percentage of depreciation. Both has to get followed, then only we can classify it under a single block. So with no loss of time, let me enter into second condition. So first condition is block of assets, same class of assets and same rate of depreciation also should be. Coming to second one, asset must be wholly or partly owned by the assessee. Only when assessee is the owner, you can claim depreciation. Depreciation is allowed only when assessee is the owner of the asset, but it has two exceptions. First exception is leased building. So, when land is taken on lease or any building is taken on lease, when we take land on lease, we construct the building. Now, owner will not construct. The lessee who has taken the property on lease will construct the building. Even building is taken on lease, any capital expenditure on this building will be spent by the lessee only. In this case, lessee is not the legal owner, but lessee has incurred the capital cost. He has incurred capital expenditure. For that capital expenditure, lessee will be deemed to be the owner. In these cases, even though assessee is not the owner, depreciation can be claimed. What is that case? In case of leased building, lessee is entitled to the depreciation on any capital expenditure or superstructure which is constructed by him. So, in case of a leased building, lessee can claim the depreciation. That is the first exception. Coming to the second exception, in case of a hire purchase. In case of hire purchase. So, when in case of hire purchase means, for example, car is purchased on obtaining car loan from a bank. So, here car will be hypothecated to the bank when we are going to receive the ownership after payment of last installment. But we can claim depreciation on this car at the time of purchase itself. In case of hire purchase, even though ownership comes on last installment, depreciation can be claimed initially at the time of purchase itself. So, this is the second exception. So, in these two cases, in case of leased building and hire purchase, so even though they are not the legal owners, they can claim depreciation. But generally what is the condition is, SC must be the owner of the asset to claim the depreciation. Coming to condition number 3, asset must be used for the purpose of business or profession. So, for your business or profession, you have to use the asset. So, for personal use, if we use depreciation is not eligible. Sir, when we use both in common for business and also personal use, then what happens? To the extent of the part it was used for business, based on time or based on any other calculation, you have to divide personal use and business use. Let us assume for business use I am using 70%, for personal use I am using 30%. So, now among the depreciation only 70% is eligible to claim. So, in order to claim the asset, it has to be used for the purpose of business or profession. Okay. If any part of the asset is only used, then that for that part only we can claim depreciation. Let us assume a building, ground floor is used for business, first floor is used for the residence. Now, on this building can we claim depreciation? Yes, but to the extent of ground floor which was used for the purpose of business only. Entire building value is 1 crore, among which if we partition, so ground floor both are of equal size, let us assume. In such case, out of 1 crore depreciation 10%, only 50% will be eligible, assuming it was of equal size. Like that, based on area, here we have divided the depreciation. So, here what I mean to say here is asset must be used for the purpose of business or profession, that is condition number 3. Now, coming to condition number 4, asset must be put to use. This is important. Ready to use is not important, put to use. If you purchase the asset but not yet used for the purpose of business, you cannot claim depreciation. You have to use it for the purpose of business, then only you can claim depreciation. When you put to use for less than 180 days, only half depreciation will be eligible. For plant and machinery 15% is eligible, but you have purchased and used in December or January. In this case, only 7.5% only is eligible for depreciation. So, when you put to use for less than 180 days, half depreciation. For 180 days or more, we can claim full depreciation. So here if you see, the cutoff date is October 4th. If you put to use on October 4th, in October 31 days will be there. If you are putting to use on October 4th, if you are put to use, in such case, for the first 3 days we didn't use, from October 4th onward we started using. That means in October 28 days. October, November, December, January, February, March, if you make a total, here we will get 179 days. So if you put to use on October 4th or later, then we will get 50% depreciation. Before October 4th, if we put to use, we will get full depreciation. So cutoff date is October 4th. For the second year, we did not see this put to use. Only in the year of purchase only we will see whether it was used for 180 days or more. For asset used in subsequent year less than 180 days, then full depreciation is eligible. In next year, whether you use the asset, you do not use the asset, here since you have already put to use, that is enough. In the year of purchase only we have to see this 180 days condition. So by this, first part of our discussion is completed. Conditions for claiming depreciation. So 4 cases I have discussed here. Now coming to the second one, manner of computing depreciation. How shall we compute the depreciation? So a basic format is given. Usually everyone have their own format, okay, but here a basic format is been given because they have their own softwares. You follow your own softwares for filing the returns. There itself you might have entered the depreciation, but here the standard format for computing depreciation has been specified. So what is that format? We begin with opening WDV. That means we follow only written down value method in this case. So actual cost of purchase must be added. What must be added? Actual cost of purchase. This is section 43(1) of 1961 Act, and in New Income Tax Act it was section 39. Actual cost of purchase must be added. So how to determine the actual cost of purchase? Let us see. Determination of actual cost of purchase under section 39. So under Old Income Tax Act it was section 43(1) and New Income Tax Act it was section 39. That format only we are discussing here. So greater than 180 days, less than 180 days should be separately written, because on this opening plus greater than 180 days we can claim full depreciation, and is less than 180 days we have to claim only half depreciation. Minus sale value, assets sold, demolished, destroyed or discarded, sale value has to be reduced, and then we will get WDV. On that WDV we can claim depreciation. So here what we need to see is what do you mean by the term actual cost? Let us conclude this one and enter for special aspects. Here if you see actual cost determination under section 39, what are the additions were been clearly specified here. There will be some additions and there will also be some subtractions. So what are those? Let us see. Purchase price of the asset. It might be a building, it might be a plant and machinery, it might be a furniture, whatever may be. Purchase price. If you are going to purchase office furniture in any showroom, they are also going to levy GST on the furniture. Whether that GST can be claimed as ITC? Yes. Of course, there is a concept of blocked credit under section 17(5) in CGST Act. If it is blocked, then okay, or else we can claim ITC. ITC is available on capital goods also. Since you are availing ITC, that amount has to be reduced from the actual price. Let us assume 1,18,000 is the total purchase price, in which 18,000 is the GST amount, that has to be reduced. That means on taxable value 1 lakh only we can claim depreciation. Sir, can I capitalize 1,18,000? If you capitalize 1,18,000, then you should not avail 18,000 depreciation. In such case on 1,18,000 you can claim depreciation. So now beginning with this 1,18,000, I have reduced this 18,000 on which ITC is claimed under GST Act. These things have been specified in section 39 itself. So what else they have specified there? To bring the asset to our location, any freight is incurred. Usually freight we write as indirect expense, but we have to capitalize it in this case. We should not write as an expenditure here. Any loading and handling charges, insurance towards and expenses incurred in connection with installation of the asset. So, these are incurred for the purpose of asset installation. Any expenditure which was incurred before installation, we have to capitalize to the asset. Any motor car purchased for the purpose of business, for using the car in the business for direct transportation purpose or else, in such case insurance, car insurance should also be capitalized. This cannot be claimed as deduction. And coming to the next one, interest on capital borrowed in connection with acquisition of the asset before the asset is first put to use. This is very important aspect which is already been discussed earlier in section 32 also. The capital borrowed, in last session itself we had made a discussion on this aspect. Interest on borrowed capital. Here if you see, interest on borrowed capital. Pre-use interest exclusion. Till the asset was put to use, any cost is incurred, it has to be capitalized. In past session we have discussed this one. If I am purchasing the asset on 10/5/2026 on obtaining a term loan from the bank, but the asset was put to use, not ready to use. Now it is ready to use, but we started using from 1st October 2026. The interest cost which was incurred during this period has to be added to the asset for determining actual cost under section 39. And interest cost from 1st October to 31st March, you can claim it as revenue expenditure. You can debit to P&L account. What has to be capitalized here? Pre-use. That means till the asset was first put to use has to be capitalized. Now let me come back. So here what we have discussed here is interest on capital borrowed in connection with the acquisition of the asset before the asset is first put to use has to be capitalized, added to the value. Let us continue. Subsidies if we receive, that has to be reduced from the block value because it is benefit to you. Subsidy or grant or reimbursement relating to acquisition has to be reduced. Sir, subsidy is received after 1 year, then you reduce it after 1 year only. Whenever you are going to receive the subsidy, then you reduce. Coming to the next one, exchange fluctuations towards asset purchase. Let me take a basic example. Asset is purchased on credit. I have imported the machinery for which payment has to be made in foreign currency. I have imported the machinery for $2,000. At the time the dollar rate is 90 rupees, I have imported the asset. On 1st May 2026. But still I was due to him. There is a credit. How much credit is still due? $500 is still due. Now at the time of making payment, initially 2000 into 90, 1,80,000 is been capitalized, added to the block. Okay. Now at the time of making payment, they have given me 3 months credit period. So I have made payment on 31st August 2026. Balance $500 I have made payment on this day, but on the date of payment the dollar rate is 95, let us assume. Now what happens in this case is $500 into, at the time of purchase it was 90, at the time of payment is what 95, so difference is 5. So 2,500 rupees has to be added to the block. It is a loss. but this loss cannot be claimed as expenditure. This loss is incurred towards purchase of the capital asset. Same thing, if this is a bank loan, then also same. At the time of borrowal, exchange rate is 90 rupees, but at the time of repayment of loan, it was 95 rupees. There will be repayment on monthly basis only, EMI will be there. For every payment on comparing to the purchase, any of the value is going to get increased here, foreign exchange rate. That loss has to be added to the block. Sir, what happens if there is a gain? If the dollar comes to 85 rupees, now 2500 should be reduced from the block. Both ways it has been given. So, exchange fluctuations, what they have been considered here is exchange rate fluctuations, add or less, both have been considered here. Now, coming to the next one, where an SC incurs any expenditure for acquisition of any asset, this is very important, on which payment made in a day. So, 10,000 rupees, which was the specified limit, which we will discuss in further sections. So, 10,000 is the limit. In excess of 10,000, if you make payment in cash, if you make in excess of 10,000 rupees payment in cash, you can't claim depreciation. It has to be reduced from the block. That means, if you purchase the asset in cash, even now on credit basis you are going to make the purchase, further payment if you make cash also, you cannot claim deduction. How much cash payment permissible? 10,000 rupees is only permissible. In excess of 10,000 in a day, sir, per day 10,000, 10,000, 10,000, I have made 1 lakh payment. Am I eligible to claim depreciation? Yes. Here 10,000 limit is fixed in a day. Okay. Next. So, here comes the actual cost. This actual cost only we are going to add to the block. That actual cost only we are going to add to the block. That actual cost is separated into 180 days, greater than or equal to 180 days and less than 180 days, so that full or half depreciation can be determined there. And consideration in respect of assets sold, let us discuss one by one. When we sell, we get sale consideration. That amount will be reduced from the block. Sir, if it was more than the block value, that's what we will discuss the special cases. Whether capital gain has to be recognized, business income comes, let us discuss. Coming to second one, demolished and sold for a scrap, destroyed and insurance compensation has been received in this case. Okay. Discarded as a scrap, whatever may be, whatever the consideration you receive, that consideration has to be reduced from the block, and on this balance value only you can claim depreciation. So, now we will discuss some special cases so that you can get more clarification on this aspect. Total we will discuss now 9 examples. By the end of the 9th example, we can get a complete clarification on block of assets concept. Whenever we have any issue on this block of assets concept also, if you see these 9 examples, you will get 100% clarification. So, with no loss of time, let me begin with the first one. Sir, in order to claim the depreciation, asset must be used for the purpose of business, and another condition is SSE must be the owner of the asset. The only exception to the owner is leased building. If any capital expenditure we are going to incur, lessee is going to incur, he can claim depreciation. In all other cases, when capital expenditure is incurred by the lessor, lessee cannot claim depreciation. So, what the question here is, sir, can we claim depreciation under IT on leased assets, they are asking. Even though it is a leased asset, if you incur any capital expenditure, you in the sense lessee, if lessee incurs any capital expenditure, on that capital expenditure he can claim depreciation. Sir, if you have taken foreign loan and repay in 4 years, can we adjust forex effects every year? Yes, that's what. For every repayment you can adjust to the block of assets. To the block you can adjust for every repayment. That is what is the clarification. Okay. So now comes here example number 1. Suppose opening WDV of plant and machinery on 1/4/2026, it was consisting of two assets. Two assets value is 3 lakhs. A new asset is purchased on 1/6/2026 for 5 lakhs. Another asset is purchased on 1/2/2027 for 2 lakhs. So here if you see, opening WDV is 3 lakhs, very simple basic example this one. This 5 lakhs cut off date before October 4th it was purchased, so 5 lakhs is eligible. And then this 2 lakhs less than 180 days. So total how much has been added here? 7 lakhs. The total comes to here 10 lakhs, which was WDV before depreciation. And to this now we are reducing depreciation. On this opening 3 lakhs plus 5 lakhs, on 8 lakhs we can claim full depreciation 15%, and which was put to use less than 180 days we can claim only half depreciation. So this is just a mere basic example. Now let me continue. Everything continues with this example 1 only. For everything, example 1 is the base. Now here point to point we will add one by one. Would your answer change in example 1 if the asset purchased on 1/6/2026 is put to use on 4/11/2026? It was put to use on when they have specified 4/11/2026. That means actually we can claim full depreciation here, but since it was put to use on 4/11, now we have to claim only half depreciation. That's why entire 7 lakhs is added in less than 180 days. 7 lakhs into 15%, opening 3 lakhs into 7 lakhs into 7.5%. 7 lakhs into 7.5% half depreciation, and opening 3 lakhs into 15%. Am I clear? Now let me continue. Okay, here 15% into 50% is given. That means we are claiming only half depreciation. Next, would your answer change in example 1 if one of the asset in the opening block is being sold for 4 lakhs? Sir, in opening block how many assets were there? 2 assets were there. Now what happens in this case? And later we have purchased on 1/6 5 lakhs one asset, on 1/2 2 lakhs another asset. That means now total 4 assets were there. Here if one of the asset in the opening block itself is being sold for 4 lakhs. Sir, in opening block how many assets were there? 2 assets were there. Opening block value is 3 lakhs. Can we say that each asset value is 1,50,000? This 1,50,000 asset is sold for 4 lakhs. Can we say 2,50,000 as capital gain? No. Whenever the asset enters into the block, it does not have individual recognition. There is only one exception which we will discuss at the end. Usually whenever assets enter into the block, we have to treat it like a ocean. For example, in AP if you take example, Krishna river water, Godavari river water, all will get mixed at the Bay of Bengal. Whenever they are going to mix at Bay of Bengal, can we take Bay of Bengal water and say this is Krishna water or Godavari water? We can't say. It was mixed in the Bay of Bengal. It was mixed in the oceans. That's what the same thing here. Whenever the asset enters into the block, it does not have individual recognition. You have to treat entire thing as a single block. That's why here, even though the opening asset is sold for 4 lakhs, you reduce that 4 lakhs. So 3 lakhs value, 4 lakhs, 1 lakh gain, we should not treat like that. Block is there, where all the assets in the block were sold, then you have to say capital gain. Here we didn't sell all the assets, only one asset is being sold. So what we need to do in this case, WDV before depreciation is 6 lakhs, out of which first preference should be given to less than 180 days, 2 lakhs into 15% into 50%, and on balance 4 lakhs into 15%. Am I clear? So first preference should be given to the asset less than 180 days, because there only half depreciation is eligible. On balance we can claim full depreciation. Sir, you have to remember the basic example we have discussed. Opening block we have 2 assets, and later we have purchased Opening block we have 2 assets, later we have purchased 1 asset which was put to use more than 180 days, 1 asset which was put to use less than 180 days. Next, would your answer change in example 1 if the asset in the opening block have been sold for 3,50,000? Sir, all the assets, if a asset in the opening block is been sold for 3,50,000 on 26/5 itself. Sir, when we have purchased the new asset 1/6 in June, we have purchased the new asset. Before purchasing the new asset itself, old assets were sold for 3,50,000. That means by this date block has become empty. Am I clear, sir? Later we have purchased the asset. In June we have purchased the new asset. By this date block have become empty. Even though block have become empty, here capital gain should not be calculated because we never calculate capital gain in the middle of the year. We never calculate depreciation in the middle of the year. We shall compute depreciation only once in the year. So that's why after the end of the year, first we will make additions, not subtractions. Whenever we are making additions, now a new asset have come into block. Sir, am I clear, sir? Even though on this date you have sold all the assets, you need not calculate capital gains. So first additions have to be done 7 lakhs and then sales 3,50,000, 6,50,000 is the value before depreciation. First preference should be given to asset purchased less than 180 days. So 2 lakhs into 15% into 50%, on balance 15% is eligible. Here only half depreciation we are claiming. So depreciation shall be computed at the end of the year. Here even though block has been cleared on 26/5/2026, the gain or loss should not be recognized. What has been specified here is gain or loss need not be recognized. Let me continue. Would your answer change if all the assets in the block were sold for 11,50,000? Here comes the case. Since it was a capital asset, the gain arising to be taxable as short-term capital gain exclusively. There is no concept of long-term capital gain in this case. Always this has to be treated as short-term capital gain whenever the gain arises. Whenever the loss arises, it has to be treated as short-term capital loss only. Gain short-term capital gain, loss short-term capital loss. So 3 lakhs, addition 7 lakhs, sale value of all the assets 11,50,000. Hence this 1,50,000 will be called as short-term capital gain. Why I have recognized gain here? Because all the assets have been sold. These cases are very important to understand the concept of depreciation. Coming to the next one, would your answer change if asset in the opening block were sold for 10,50,000? So here assets in the opening block itself were sold. In opening block how many assets were there? 2. Here 1 asset purchased, here 1 asset purchased. Total we have 4 assets. Now we are selling only assets in the opening block. So we have 2 more assets in the block. So let us go for as per format. We don't deviate the manner of computation. So 3 plus 7 minus 10,50,000. Since there are 2 assets in the block, we can claim depreciation. But here more than block value the asset is being sold. Here the block value is 3 plus 7, 10. Now opening assets were itself sold for 10,50,000. Hence this 50,000 should be treated as short-term capital gain because already in excess of WDV it was sold. That's why we are recognizing capital gain here. Now here comes the question. Is the block closed? Answer, no. It is been continued with 0 value because there are how many assets? 2 more assets. Even though those 2 more assets were sold for 1 lakh later, that 1 lakh to be treated as capital gain, no again. That's why keeping that in view, here the block continues with the remaining 2 assets, but with which value? 0 value. Later when those were sold, we have to recognize the short-term capital gain. Now coming to the next example, Would your answer change if all the assets in the block were being sold for 7 lakhs? All the assets in the opening block were sold for how much value? 7 lakhs they are saying. Now tell me what we need to do in this case. All the assets, so 3 lakhs is the opening block, addition 7 lakhs. Now sale of all the assets for 7 lakhs. So 3 lakhs is the loss. Now block value is 10 lakhs which was sold for only 7 lakhs. So 3 lakhs will be treated as short term capital loss. Now whether the block continues? No. The block is closed because all the assets were being sold. Since all the assets were being sold, here block will be treated as closed. Now coming to next one. If the asset purchased on 1/6/2026 has been sold for 9 lakhs. On 1/6/2026 whatever asset is purchased, if it was sold for 9 lakhs, then what happens? Let us see. Opening WDV 3 lakhs, 7 lakhs is the purchase, total is 10 lakhs. Now asset purchased on 1/6, the new asset which was purchased has been sold for 9 lakhs. So now what is the block value? 1 lakh is there. Are there assets? Yes. Opening 2, 1, 1, total 4 assets were there, only 1 assets were sold. So 3 assets were still remaining, that value is 1 lakh. On 1 lakh we can claim depreciation, because first preference should be given to asset purchase less than 180 days. Here less than 180 days purchase is 2 lakhs, but block value itself available is 1 lakh only. That is why on that 1 lakh we are claiming half depreciation. Sir, opening asset is purchased for 5 lakhs now. Yes. 5 lakhs asset sold for 9 lakhs means, can I say 4 lakhs capital gain? So we have to remember the concept of ocean. Whenever the river water is mixed into ocean, it does not have any individual recognition. Same way, whenever the asset goes into the block, no individual recognition is available. Is the concept clear? Now here comes the last example. This is special case. What I have usually said is there will be no individual recognition in case of block of assets. The only one case where the individual recognition is available, that is what we are discussing here. Would your answer change? In example 1, if the asset purchased on 1/2/2027, that means the second asset which was purchased is being sold now. For 2,20,000, whenever the asset which was put to use for less than 180 days is being sold in the year of purchase itself. It was being sold in the year of purchase itself. What we usually do here is, in this 7,80,000, first preference will be given to the asset purchased less than 180 days, so that half depreciation can be taken. But in this case, that asset itself is being sold. Sir, you said that there will be no individual recognition. This is an exception. So on the 7,80,000, full depreciation is being claimed, because the asset purchased less than 180 days is already been sold. That is why we can claim full depreciation here. This is the closing WDV. Okay. So now let us continue. Concept of depreciation in Companies Act is quite different from Income Tax Act. In Companies Act, the rates of depreciation were completely different. In Income Tax Act, next we will discuss, the rates of depreciation were different. So that is why, even though as per Companies Act you might recognize gain in your books of account asset wise, here we need not calculate asset wise. We are not asking the SSE to prepare your books of account itself as per block of assets. Your books of accounts, your wish. You claim straight line method or WDV method or any other new method, it is your wish. Machine value method, there are many types of depreciation, many methods for computing depreciation. But the depreciation claimed in your books of accounts will be added back. and which was computed using these provisions, block of assets will be reduced in computation. Now coming to the next one. Here WDV before depreciation means WDV as per books of account or WDV as per block of assets? WDV as per block only. Our books are not the criteria here. Coming to the next concept, additional depreciation. Before that, here some points we have kept balance. Let me conclude them. To understand this format, we have learnt 9 examples. To understand this concept, we have just learnt 9 examples. So, which if anyone want to learn this concept of depreciation practically, if those 9 examples have been understood, the concept will be very easy. Now coming to the next one, note number 1. Consideration in respect of any building includes insurance also. That means here the asset is been destroyed, any insurance compensation is received, it has to be reduced from the block. Any floods have been incurred, any fire accident have come for which insurance compensation is received, it has to be reduced from the block. Next, very important thing, if we have both agricultural and also business income, that means composite income. Now depreciation on the asset also among agricultural use and business use must be separated, because agricultural use is exempted from Income Tax Act, business is taxable under Income Tax Act. Agriculture income is exempted in Income Tax Act, business income is taxable. That is why we need to separate the value agriculture and non-agriculture. So for the purpose of such separation, we have rules, income tax rules, which we will discuss later. Tea, coffee, in case of growing and manufacturing tea, we have 60% agriculture, 40% business. Growing and manufacturing coffee, 65% and 35%. Roasted, in this case again 60% and 40%. So like this, how to separate agriculture and business income, we have separate rules. That is why they assume that depreciation is fully allowed. We assume full depreciation. Among the profit, we will divide agriculture and business income, means automatically depreciation is also divided. That is the intention here. When the asset is used for partly agriculture and partly business, we need not worry, we need not separate. You compute the depreciation as per normal concept only, because the profit arising when there is a composite income exempt and business income, we have rules for separating. There automatically depreciation also will get separated. Next, revaluations are not permissible. Whenever revaluation is made, asset value is increased and the difference added to capital account. On that revalued figure, the asset value 10 lakhs, since the value of the asset is increased, they are adding 5 lakhs. Can we claim depreciation on 15 lakhs? No. So out of 15 lakhs, 5 lakhs upward revaluation should be reduced. Your books, your wish. In your books of accounts, you can make revaluation and create a revaluation reserve also. But here we can't do so. Amount of downward revaluation, both the things, not only upward, downward also we need not make. Here if you see impairment of assets, there is a concept in accounts, impairment of assets. They might recognize if the market value is lower than the WDV, they might impair the assets, impairment loss might be measured. Here if you see 15 lakhs, 10 lakhs is the value, but market value is only 4 lakhs. Now what they will do, this 4 lakhs they will reduce, 6 lakhs is the WDV, they will say, this is as per your books of accounts, but your books is not our criteria. That 6 lakhs we will add back, you can claim depreciation. So depreciation on the above effect only should be given. Revaluations should not be considered. That means whatever SC considered in his books of accounts must be reversed. Should have to be reversed. Then only we can compute the depreciation. Okay. So, total if you remember sir, we need we have 10 topics in depreciation, in which we have completed these 4 aspects. Next we need to discuss additional depreciation. Before discussing additional depreciation, rates of depreciation were being given here. This is purely for our understanding sake. Practically rates can be seen in the block. Practically rate can be seen in the block. So, let me show where is in our material. The Google Drive link, if you remember, income tax rules were given. At the time of initiating our session, these are draft rules. Now, these draft rules were notified also, available in income tax portal itself. So, here are the depreciation rates which were given in income tax rules. Table of rates at which depreciation is admissible. These depreciation rates I have summarized and given. So, they are not descriptive, comprehensive list is only given in the material. If you want in detail, you have to go through these income tax rules. Various depreciation rates were given. Various rates were given, around 6 pages, depreciation rates itself have been specified. So, I have summarized them, made it into a summary. I have made it into a summary here, rates of depreciation. Okay. But if you need specifically for this asset how much is available depreciation, you have to go through that block detailed. This is just a summary. Okay. So, buildings we can claim 5% depreciation. Residential, sorry, buildings 10%, no sir, yes. What do you mean by the term residential building? Staff quarters. Company staff quarters will be treated as used for business only. So, on staff quarters they can claim 5% depreciation. Usually on building how much is the depreciation rate? 10% is the depreciation. Entities claiming 80 IA deduction under Income Tax Act, old Income Tax Act, profit linked deductions were given for infrastructure facilities, they can claim 40% depreciation. Wooden structures 40% depreciation. Furniture 10%. Motor vehicles 15%. You may say car, bike, auto, lorry, whatever may be. Motor vehicles 15%. But vehicles used on hire, that means transport business, they can claim 30%. During the year 1920 sir, not now, financial year 1920, Finance Act 2019, they have given a 30% depreciation for normal motor vehicle, hire business 45% depreciation. To encourage the asset purchase between 1920 motor vehicles. So, these additional depreciation rates were given at that time, but now there is no such aspect. Now, we are claiming only 15% and 30% in case of hire business. If asset purchased during this time and still continued, there you can claim 30 and 45%. But that block is not there now. Now, all the new asset purchased motor vehicle only 15% is eligible. Aeroplane which was purchased for the purpose of business, 40% depreciation can be claimed. So, Air India, Indigo, they can claim on aeroplane how much depreciation? 40% depreciation they can claim. So, molds which were used to manufacture plastic goods or rubber goods, so 30% depreciation. Pollution control equipments 40% depreciation. Earlier for all these 100% depreciation is admissible, but from Finance Act 2017 itself they have reduced this one 40% only, maximum 40%. Next, plant and machinery used in semiconductor industry 30%. cell phone manufacturing, TV manufacturing, semiconductor industries can claim 30% depreciation on plant and machinery. Life saving medical equipment, hospitals can claim 40% depreciation. Energy saving devices, a list of around 50 items were given in that income tax rules. I have just given a summary here. Energy saving devices 40%, computer 40%, computer software 40%. Can I say computer software is an intangible asset? Yes, we can say. On which only 25% depreciation is admissible if you classify as an intangible asset. Or else there are many case laws, software cannot be separately used, it has to be installed in computer itself. That's why we can claim computer rate of depreciation only. There are various case laws. Or else you can treat it as an intangible asset to avoid the litigation and claim 25% depreciation. Books, annual publications or not annual publications or libraries, for them 40% depreciation is eligible. Windmills 40% depreciation, oil wells 15%. Very important thing nowadays, the trend is being increased, solar. For our business, electricity bill is coming very huge. That why solar panels were installed. 40% depreciation we can claim. All other plant and machinery 15% depreciation. Ships 20% depreciation. Intangible assets 25% depreciation. Is it clear, sir? So, these are the rates of depreciation, and there is one more special exception. For the purpose of industrial research, any technology or know-how developed to manufacture any article using any technology, they purchase any new plant and machinery. For them, technological product manufacturing business, for them exclusively 40% higher rate of depreciation is given. This is an exception. Now coming to the next one. Rates of depreciation, practically we can see based on block of assets, need not be remembered. Block of assets we can go through. So with no loss of time, let me come for 5 points have been completed total. 10 topics in depreciation, in which 5 were completed. Now we are entering for additional depreciation. Now we are entering for additional depreciation. Along with normal depreciation, SSEs who were in the business of manufacture. Here manufacturing also includes printing and publishing also. Not only printing and publishing, any manufacture of products. For new plant and machinery, second hand is not eligible, please remember. For manufacturing purpose only, this additional depreciation will be given. That's why office appliances cannot be claimed as additional depreciation. So first of all, what is the additional depreciation? 20% of the actual cost. But the important thing here is, normally on plant and machinery 15% is eligible. Along with this 20% additional depreciation can also be claimed only on a condition that you have to first put to use. You have to first, what you need to do first? You need to put to use. That one also, this deduction is available in first year only. In second year, it was already been first put to use. Second year onwards, you can't claim depreciation. Sir, here first in the sense, this has to be a new manufactured product. I don't say no. But why the term first has been used here? You have to first put to use here. In the first year itself, you can claim this additional depreciation. Second year, you can't claim because it was already put to use. What is the difference between first put to use and put to use? Is there any difference? Yes. In the year of purchase, we say it as first put to use. From next year onwards, we say put to use. Am I clear? So, for the first put to use, less than 180 days, 10% is only allowed, less than 180 days. In which, very important thing here is, balance 10% can be claimed in next year. The only exception. Usually, how much is eligible here? 20%. But if it was put to use for less than 180 days. Now tell me, 10% in first year and 10% in second year. That's why we are saying here as it should be a new plant and machinery. Only on plant and machinery we can claim. Can we claim on furniture? No. Can we claim on buildings? No. Next, power manufacturing units, generation or transmission or distribution of power. Power generating units also can claim additional depreciation. Now, what is ineligible? Second hand plant and machinery is ineligible, and any office appliance is also ineligible. Transport vehicles, ships or aircraft, these are not used for manufacturing purpose, that is why you cannot claim. Any plant and machinery installed in office premises you can't claim, because plant and machinery, why we are giving additional depreciation? Because it was being used in manufacture, that is why we are giving. Next, further we will discuss asset used in scientific research, you can claim 100% deduction. There are further sections, specified business, scientific research, skill development projects, there 100% deduction is availed. That is why, since 100% is already availed, you can't claim additional depreciation. These are special points only, not useful for regular. For manufacturing concerns, the thing which I am specifying now is important. Additional depreciation for new plant and machinery, we can claim additional 20%. That is also in first year only. In first year, if you are claiming only 10%, then in second year you can claim another 10%. Coming to the next one, unabsorbed depreciation. First, how to separate unabsorbed depreciation. Please see here case 1, net loss is 8 lakhs in P&L account. P&L account we have already debited 5 lakhs depreciation. Now here, if depreciation is not written, how much is the loss? 3 lakhs will be the loss. 3 plus 5, since depreciation is written, the loss has come to 8 lakhs. That is why 3 lakhs will be treated as business loss and 5 lakhs will be treated as unabsorbed depreciation. Why we are separating business loss and unabsorbed depreciation? Because there are some differences between business loss and unabsorbed depreciation. Business loss can be carry forwarded only when we file the return within the due date. The due date of filing return, new section 263, from 31st July to 30th November, there are various due dates based on the nature of the SSE. So here it shall be carry forwarded only when the return is filed within due date. But unabsorbed depreciation, even for belated returns also it can be carry forwarded. That is the first difference. Coming to second one, business loss can be carry forwarded only for 8 assessment years, now 8 tax years. But here you can carry forward for any number of years. You can carry forward for any number of years. Am I clear? No limit. And one additional thing here is, carry forward business loss should only be set off against current year business income only. Set off rules. Carry forward losses against that income only we need to set off. But here if you see, unabsorbed depreciation can be carry forward and set off against any head of income except salaries and casual incomes, means winning from lotteries, like that 30% will be levied, except salaries and winning from lotteries. Out of any income you can set it off. Which one? Unabsorbed depreciation. Since business loss and unabsorbed depreciation have 3 differences, we need to separate business loss and unabsorbed depreciation. Another example, net loss is 3 lakhs after writing depreciation of 5 lakhs. If depreciation is not written, business is in profit of 2 lakhs. That is why business loss is 0 in this case. The entire loss of 3 lakhs is unabsorbed depreciation. Out of total depreciation of 5 lakhs, 2 lakhs is been absorbed with the profits. That is why balance 3 lakhs will be called as the unabsorbed depreciation. So, like this, business loss and unabsorbed depreciation has to be separated. So, 7 topics we have completed. Recently, additional depreciation and unabsorbed depreciation is also dealt with. Next, coming to 8th topic. In case of power sector units, they have 2 options. Either you follow WDV method. If WDV method is followed, block of assets concept will come into existence. Or you follow straight line method. If straight line method is followed, these are income tax rules. Here, these are the depreciation rates which we have seen. The last page of rule, 410th page, 409 page, straight line method depreciation rates were given based on the asset type, diesel, electric and gas plant 8.24%. These are the rates of depreciation using which method? Straight line. Every year same value, same percentage. If asset is purchased for 1 lakh, 1 lakh into 5.27 in this case. Second year also 5 lakh into 5.27. Third year also same thing till it becomes 0. Till 1 lakh is been completed, same depreciation will continue. This is only in case of power generating units only, not for all the persons. So, if this option is opted, then block of assets method should be followed. Block of assets method should be followed if WDV is opted. If straight line method is opted, based on useful life of the asset, they have said there how much per annum to be claimed. Okay. Coming to the next one, procedure is as follows. If straight line method is followed, now what is the procedure? Let us see. Let us assume the actual cost is 10 lakhs. For 4 years depreciation is claimed. Assuming the asset value is 10 years, 4 lakhs is been claimed and now the balance WDV is 6 lakhs. So, if the 6 lakhs asset is sold for 5 lakhs only, if the value 6 lakhs value of asset is sold for which value? 5 lakhs only, then what happens? 1 lakh, usually what we say in block of assets, short term capital loss. But as per this special concept which was applicable for power sector units, they have said it can be claimed as terminal depreciation. In section 33 they have specified. In New Income Tax Act, section 33 they have specified this can be treated as terminal depreciation. In 5th year itself you can claim that 1 lakh deduction. What happens if the asset is sold for 6,30,000? Then in this case WDV 6 lakhs minus sale value 6,30,000. Since you have claimed this as deduction in business, usually what we will say? Block of assets method, this 30,000 will be said as short term capital gain, but here this 30,000 will be treated as business income only, deemed income, section 38. This will be treated as deemed income. What happens if asset is sold for 10 lakh 20? Now you see this is a special point. How much deduction we have claimed in business? 4 lakhs. So, to the extent of 4 lakhs only is taxable as balancing charge, business income. Business income, balancing charge, the term is used here. Section 38, only 4 lakhs is taxable. In extra 4 lakhs we got 20,000, this will be treated as capital gain, long term or short term, depends upon the asset purchase date. More than 2 years we treat long term, less than 2 years we treat short term. Coming to the next. However, this concept of SLM is not applicable if purchased asset is being sold in the same year. See this example. 10 lakhs value of asset, that year only they have purchased and sold for 8 lakhs in the same year. In this case, this 2 lakhs will be treated as short term capital loss. This 2 lakhs is to be treated as short term capital loss. Sir, we say it as terminal depreciation. No, not available. In the year of purchase itself you have claimed. That's why that is not available. So, for power sector units, a special concept called terminal depreciation and balancing charge is being discussed. Now, coming to the next important thing, in case of amalgamation or demerger, in the middle of the year if it is done, if amalgamation or demerger is done in the middle of the year, now then what we need to do? You assume it was not taken at all. You compute depreciation. That depreciation based on number of days, you divide between predecessor and successor. Very simple thing, simple procedure is been specified here. You compute the depreciation as if the demerger has not been taken place at all, and apportion the depreciation in the ratio of number of days. Very simple they have specified here. Now, the last topic of depreciation, notional cost. In certain cases, instead of actual cost, we take notional cost. Instead of actual cost, we consider notional cost. So, what are those cases? Let us see. When the scientific research asset is brought to normal business. In case of scientific research, in further sections we will learn 100% we can claim deduction. Whenever you are claiming 100% deduction, you are bringing for normal business means its value is 0. Okay. Section 35 of 1961 Act, whereas under New Income Tax Act we will discuss further. In next session, tomorrow session itself, we will have a discussion on that one. Coming to next, asset acquired by way of gift or inheritance. Whenever we are receiving asset by gift means value 0 from our point of view, we did not pay any consideration. Our cost of acquisition is 0, but here not the actual cost, notional cost will be taken, WDV to the previous owner. If it is a new asset, actual cost to the previous owner should be considered. Now, coming to the next, in case of second hand assets, in case of what has been given here, second hand assets, what they have specified, second hand assets if you are going to purchase, usually invoice will not be available. That is why they might say the value is 4 lakhs or 10 lakhs. How did you pay that amount? 10,000 per day cash we have paid. Like that they might enhance the value and to claim additional depreciation, more depreciation. The value is increased, automatically depreciation also will increase. Keeping that in view, for second hand assets purchase, the value will be determined by assessing officer only. Initially, at the time of filing our IT return, we will take our own value. That means, whatever the price we have paid for the purchase of that second hand asset, that value only we will consider. But later, if our case is selected for scrutiny or income escaping assessment or such assessment, in such cases, the value will be determined by the officer now. Officer will determine the correct value. We have to accept it. He will take previous approval of the joint commissioner to determine this value. That means, based on his permission, he will determine the value. Now, let us continue. Coming to the concept of reacquisition of asset. What do you mean by the term reacquisition? Reacquisition means we are selling the asset and again we are only purchasing. So, the WDV at the time of transfer or new purchase price, whichever is lower. Just to increase depreciation, usually they sell and repurchase the same. That is not permissible. WDV at the time of original transfer only will be considered. Next one, sale and lease back. Now ownership is being transferred, sold, and again from that person only we have took on lease. Now lease rent will be paid. Now in this case, who can claim depreciation? Let us assume A has sold to B, and again from B, A has taken on lease. Tell me, who has to claim depreciation? Since A has sold the asset to B, now who is the owner? B is the owner. So who can claim depreciation? B can claim depreciation. On which value? WDV of the lessee. A's WDV only. Since it's a sale and leaseback transaction, the value might be dependent upon future lease rent price also. This value is not the correct value. That's why previous WDV value is only been considered here. Sale and leaseback. B can claim depreciation on A's WDV. Next, very important. Building is till now used for residence, but now we are using this building as an office. Since we are using as an office, we can claim depreciation. How much depreciation is permissible? Actual cost of the building minus depreciation if used for business purpose since the date of its acquisition. Since the date of its acquisition, they can. Original cost minus depreciation. After 10 years I am using. Original cost how much? 50 lakhs. So 50 lakhs minus every year 10% depreciation should be reduced. You are not claiming the depreciation. To compute the value of the block, to compute the how much has to be added to the block, we are reducing the depreciation. Per annum, in WDV value method, never it becomes 0. That's why we use WDV. Per annum 10% depreciation is eligible, that you reduce, and now that value will be added to the block. This is only in case of building. Any other asset, for example car, till now it is for personal use. Now I started using in my business. Even though 2 years have been completed for purchase of car, I have purchased for 7 lakhs, 2 years were completed. Should I reduce 15% notional depreciation every year? No need. On 7 lakhs itself, now you can claim from this year onwards depreciation. Because exclusively for which asset they have said here? Only for building. Building converted to be used for the purpose of business only given here. Remaining assets, if they are used for business, what can we do in this case? We can claim depreciation on original cost only. We need not reduce depreciation. Next, holding to subsidiary or subsidiary to holding any asset is transferred. WDV in the previous owner books. Holding to subsidiary transferred. Subsidiary can claim depreciation on holding company books value. Next, amalgamation also same thing. WDV of the amalgamating company. Demerger also same thing. Here capital gain is not arising, which is not a transfer we are saying. That's why previous owner WDV is only considered. Cost of the resulting company will be WDV of the demerged company. If non-resident is bringing any asset to India, reduce the notional depreciation. Assume that asset is used in India and reduce the notional depreciation, then only cost will determine. Actual cost minus notional depreciation will be taken as the WDV. Conversion of a sole proprietor into company, conversion of partnership firm into company, conversion of unlisted companies into LLP. All these are not a transfer. Capital gains will not be levied. There are some conditions which were specified in capital gains, which we will discuss in further sessions. Here also cost to successor will be WDV in the books of the predecessor. Next, specified businesses like manufacturing of fertilizers, those some specified businesses, 10 businesses we will learn in next session. There you can claim entire cost as deduction. If that is brought to normal business, then here deemed business income will come into existence. Actual cost minus depreciation will be treated as deemed income. That deemed income only now will be added to the block to claim depreciation. This we will discuss tomorrow. In tomorrow's material, this will be there, specified businesses. Conversion of a stock in trade into capital asset. Fair market value we have treated as business income. In yesterday's session, we have discussed. At the end of the charging section, whenever the stock in trade is converted into capital asset, this 20 lakhs purchase 5 lakhs, now at the time of conversion fair market value is 20 lakhs. So, what we have determined in this case, this 20 lakhs will be treated as the business income. We have already learned this aspect. Now, this 20 lakhs, if this is a depreciable asset, this 20 lakhs will be treated as the WDV. On this 20 lakhs, now we can claim depreciation. Okay, by this section 33, earlier section 32 is the depreciation, now section 33 is the depreciation. You have completed this depreciation aspect. So, what we have learned till now, because next section depends upon the thing which we have learnt earlier. So, we have discussed from charging section 26 onwards. Now, 34 section which I am going to discuss depends upon these sections. Section 26 is the charging section which deals with income, not expenses. That is why let me strike it off. Section 27 has specified that business income is to be computed using section 28 to 65. That means it has specified the manner of computing business income. It does not specify any conditions for expenses. That is why let me strike off this one also. Now, coming from section 28 onwards, we started discussion yesterday. From section 28 to today section 33, we have discussed a detailed 10 points in depreciation, each point many examples we have dealt. Section 32, some special expenses were being given. I will show you, sir, do not worry, one by one. Yesterday we have already discussed, because next section depends upon this one only, that is why I am explaining. First, section 29, 28. Expenses relating to building or plant and machinery or furniture. Section 28 we have discussed. 29, employee welfare expenses, PF, PSI, both employer and employee contribution. A big amendment has also come. Employee contribution also, now we have time up to the due date of filing return of income, that we have discussed. After 29, section 30, which deals exclusively with insurance, premiums paid, expenditure. 31, bad and doubtful debts exclusively. 32, some special deductions like bonus or commission, interest on borrowed capital. These are all things we have discussed, special expenses. Yeah. So section 28, what did we discuss in section 28? Building, plant and machinery or furniture, any rent, repair, insurance or any municipal taxes paid, these can be claimed as deduction under section 28. And next in section 29, employee welfare funds, deduction has been discussed. Section 30, insurance exclusively, whether insurance premium can be claimed as business expenditure, we have discussed. Section 31 is regarding bad debts and provision for bad debts. Section 32, special expenses list we have learned, like interest on borrowed capital, etc. Section 33, depreciation. All these expenses from section 28 to 33 are specific. Now, any other expenditure will be general, which were specified in section 34, which were specified in section 34. Any expenditure which was not specifically given in the act, but if it was spent for the purpose of business or profession only during the previous year, now tax year, incurred during this tax year only, business or profession exclusively in this tax year only it was incurred, it is not a capital expenditure. If it is a capital expenditure, we have to capitalize and claim depreciation. It is not a capital expenditure, and it was not specified in section 28 to 33. Then it comes under general deduction. For example, advertisement expenses. Till now we didn't discuss anywhere, but advertisement will be for the purpose of our business promotion only. That's why whether advertisement expenses can be claimed as expenses. Yes, under section 34. Earlier section 37 is the general deduction. Now it is section 34. Now let us see that section. The expenditure should not be specified in 28 to 33. Not only this, next sessions we will learn section 44 to 49, 51 to 52. In no sections it should be mentioned. That's because this is general deduction. It should not be the personal expense. Personal expense cannot be claimed as deduction. It should not be capital expenditure. It should be exclusively for the purpose of business or profession only. And it should be used for the purpose of business during the tax year. Earlier we might have used the terms previous year, assessment year. Now we have to use the term tax year only. It should have been incurred during the tax year. Then it can be claimed as general deduction. But for general deduction, there are 3 exceptions, very important practically also. Any offence or prohibited purpose, not allowed. Any expenditure for any offence, if it is an offence, you cannot claim. Illegal expenses cannot be claimed. Even you have committed an offence for which you have paid penalty, those cannot be claimed. Penal in nature cannot be claimed. Compensatory in nature can be claimed. Have not done contract in time, so my customer is asking to pay liquidated damages. Whether this can be claimed as expenses? Yes. Compensatory is different from penal. Penal nature cannot be claimed as deduction. Many special points, practical at the time of filing returns, we might have some doubts. GST late fee can be claimed or not expenses. Interest on late payment of GST can be claimed or not. TDS, late payment interest, TDS late fee 234E old section, whether these can be claimed as deduction or not. These are the doubts which arise in our mind, for which now I will give you the clarity. First thing, offence or prohibited purpose not allowed. CSR expenditure, corporate social responsibility expenditure cannot be claimed. companies mandatory to spend 2% of the profits towards social responsibility, contribution to a trust or spending for charitable purpose on their own, whatever may be, 2% has to be spent for charitable purpose. And next, section 37 2b, this is old section, but now in section 34 itself they have specified. What they have specified here? Advertisement expenditure in a magazine published by political party. Political advertisement expenses were allowed generally, but if you incur advertisement expenditure in a political party brochure, that you cannot claim. Political party brochures, pamphlets, magazines, generally advertisement expenses were allowed under section 34, no problem, or old income tax act section 37 allowed, but now if you incur for brochures, pamphlets and magazines of a political party, it cannot be claimed as deduction. Okay, a big list of expenses were given for our benefit, for our practice. In order to easily understand, the list of expenses were being given here. Let us go through it one by one. First, beginning with GST delays. GST are 1, 3B, 9 late fees. Can we claim deduction? Yes, because they are compensatory fees only. They are not penalties. Penalties you cannot claim. Vehicle has been intercepted during transit. Since invoice is not proper, penalty is being levied. Twice the amount of tax. Tax 10,000, penalty 20,000. Whether this penalty 20,000 paid can be claimed as expenditure? No. It has to be disallowed. Any penalty levied for offences like fraud or tax evasion, strictly disallowed. Interest on late payment. Late payment, interest. How much? 1.5% per month, 18% per annum in GST. In this case, interest can be claimed as deduction. Interest is levied for time value of money for late payment. Okay. Now coming to the next important thing, TDS interest. TDS is a provision which will be in balance sheet liability side. So that's why TDS is a provision, not an expenditure item. But TDS belatedly paid, interest is paid on TDS. Is it allowed as deduction? No. These are old sections only, sir. Just for remembrance sake, I have given them only. Interest on late payment. This is nothing but TDS is income tax only. That income tax interest cannot be claimed as deduction. Late filing fee 234E you cannot claim. However, GST late payment interest can be claimed. Here these 1 and 2 points I have already given. Okay. But any expenses incurred for offences cannot be claimed. For everyone I have given example here. Section 34(3), A, B, C, D, 4 points were given in section 34 where they cannot be claimed as expenditure. What are those? Offence or prohibited by any law. A company pays bribe to a foreign national, even paid abroad also. Bribe paid within India only they are not saying. Anywhere you pay bribe, it cannot be claimed as expenditure. Pharmaceutical pharma is taking doctor to international vacation. For pharma company it is an expenditure. Doctor has referred that medicines to many of the patients. So they have taken to him for international vacation. Now in this case, this is expenditure to the pharmaceutical company. But providing such incentives to doctor is prohibited under law, medical law. For doctors, they should not give commissions like that. They should not provide perquisites like that. It was prohibited by law. It violates the guidelines of medical council. That's why you cannot claim this as expenditure. Not only from your point of view, to the person who is receiving that amount, if it was prohibited under any act, that you cannot claim that expenditure. Very important thing, straightforward section. Next. Compounding fees also cannot be claimed as expenditure. What do you mean by the term compounding fee? Here if you observe, a business pays a compounding fee to the register of companies to settle a failure to hold AGM. Since AGM is not conducted in time, they have paid compounding fee. So what they have specified here is to compound an offence. Any fees has been specified in law itself as compounding fee specifically. It cannot be claimed as deduction. Next, any settlement fees for contravention of law. A firm pays settlement amount to SEBI for violation of some regulations. This settlement fee is also violation of law. This cannot be claimed as deduction. The list of expenses which can be claimed deduction and which cannot be claimed deduction is being given in detail here. Now let us go through these expenses. Commission, nowhere it was specifically given in the act, that is why commissions can be claimed as deduction under section 34. However, secret commission cannot be claimed, where you did not disclose the details of the commission, to whom it was paid, why it was paid. Simply writing a provision for commission, they have simply said that we are paying 5 lakhs commission to Mr. X, since he has helped to our business, he has referred many clients, that is why we are paying him commission in the business, many customers he has referred, we are paying him 5 lakhs commission. So what are the customers he has referred and how much you have paid him commission, whether TDS is deducted or not, all these things should be checked here. That is why commission, you can claim expense when you provide the details of commission. All these things come at the time of assessment only, at the time of scrutiny only. At the time of filing return, everyone can claim expenditure. If you are going to make a payment through online and you are deducting TDS, you can claim expenditure. But if the case is selected for scrutiny, they have to explain why the commission is paid, for what purpose, is there any list which was maintained, so the aspect should be produced. Coming to next, business taxes like GST, customs tax, professional tax, these can be claimed as deduction. Income tax cannot be claimed as deduction because we are computing income tax. Income tax cannot be claimed as deduction. Even interest on income tax also cannot be claimed as deduction. Penalty for violation of GST laws or customs laws cannot be claimed. Normal business taxes can be claimed. Next, late fee paid for belated filing of GST returns is allowable. TDS returns is an allowable expenditure, treating it as regularization fee. If that is your interpretation, you can claim 234E late fees also. If you treat it as a regularization fee, you can claim. But in most of the assessments, department is not treating it as regularization fee. They are treating it as a penal nature only. That is why at the end of the chart I have given here, no, don't claim. But if you consider it as if your interpretation is as a regularization fee, you can claim. Expenses for shifting of office you can claim, but expenses for shifting of factory is a capital expenditure which should be capitalized to claim depreciation. Expenses on issue of bonus shares can be claimed as expenditure, because in bonus issue no additional money will come, only the reserve will be transferred to the capital. But right shares if were issued, right shares in the sense here new issue has been done, this will raise the capital, hence this will be treated as capital expenditure. Right shares, additional capital, this cannot be claimed as deduction. Sir, these are allowable expenses, these are not allowed expenses. Advertisement expenses can be claimed, but advertisement in magazine, pamphlet of political parties cannot be claimed. salary expenses, purchase of goods, audit fees, freight can be claimed. CSR expenditure cannot be claimed. Printing and stationery, power bills, all these are general deduction, section 34. Power and fuel, telephone charges, travelling expenses, puja expenses, conveyance expenditure, office maintenance, sales promotion, legal expenses. On this legal expenses under GST Act, RCM will get attracted, reverse charge mechanism to be paid. Staff welfare expenses, postage and courier. Staff welfare separately in section 29 we have dealt with PF or ESI or other things, here you can see. Bank charges, license fees, Hamali charges. Rent towards plant or furniture is already now covered in section 28, so no need here. Earlier it was not covered, that's why we have come to general deduction, but now this is covered in section 28. Now we can delete from this one. Next, warranty expenses, director remuneration, loss of cash or stock loss, cash loss can be claimed as expenditure. ROC charges, except company incorporation expenses is a preliminary expenditure which we will discuss in next session, where we can claim in 5 equal installments. Registration charges can be claimed in 5 installments as a preliminary expenses. Expenses for issue of debentures, debentures means nothing but debt fund. Debentures means nothing but debt fund. Discount on issue of debentures, over the period of debentures we need to amortize. Premium also over the period of debentures, premium paid at the time of redemption also over the years, how many years it was there, that many years they need to amortize. Interest on late payment to creditors we can claim expense. Foreign exchange fluctuations, for capital assets what I have said to is you have to adjust to the actual cost, section 39. In today's session itself we have discussed. All other exchange fluctuations you can claim expenditure. Liquidated damages paid, if it was paid towards capital asset, then you have to capitalize to claim depreciation. Towards our existing revenue contracts you can claim expenses. Expenditure for alteration of memorandum and articles of association, capital clause will be treated as capital expenditure. General objects clause and all we are amending, then that will be treated as general deduction expenses. Late fee of TDS cannot be claimed, that's what I have said. But if your denotion, if you are ready for litigation, you can treat it as regularization fee and claim deduction. It is at our wish. Interest on late payment of TDS cannot be claimed. Income tax cannot be claimed. Interest on income tax cannot be claimed. And this is very important. Those, if our creditor is registered under MSME Act, if our creditor is registered under MSME Act, to this creditor if we make late payment, okay, for which interest is being paid, that interest cannot be claimed as deduction. Even late payment also, next session we will discuss. Within specific agreement is there 45 days, specific agreement not there within 15 days, there are some special concepts to be discussed. Disallowances were there which we will discuss in next session. Now we are in general deductions. MSME late payments to creditors also cannot be claimed deduction. Late payment interest also cannot be claimed as deduction. Next, expenditure incurred for removing the defects in the title. So, when an asset is there, for that asset any litigation is being done, the legal expenses incurred towards such asset should be capitalized, because that expenditure is incurred to remove the defect in the title which is capital in nature. income tax cannot be claimed, wealth tax cannot be claimed, dividend distribution tax, these are not there now. Main income tax is only there. Income tax cannot be claimed as deduction. These things also I have discussed above. Rights issue cannot be claimed. Bonus issue can be claimed. Discount on issue of and premium redemption on debentures over the number of years, it should be amortized. So, by this what we have discussed here is section 34. Till now allowances were discussed. From now disallowances will come into existence. If you see, income tax cannot be claimed as deduction, first basic thing which I have already discussed now, because we are computing income tax, that income tax cannot be claimed. Even tax paid in foreign countries also we cannot claim here. If that is claimed as a relief, we can claim that credit in India, that cannot be claimed as deduction. If you are not going to claim credit, then you can claim. But income tax which was paid in India cannot be claimed as deduction. And for all of the chartered accountants or tax practitioners in practice, this is very, very useful in tax audits. When TDS is not deducted, applicability of TDS has to be checked first. When TDS is applicable and TDS is not deducted, then 30% of the expenditure will be disallowed. But it is different in case of non-residents. For non-resident, if you do not deduct TDS, 100% of the expenditure will be disallowed. Wherever the TDS provisions are applicable, if you do not comply with the TDS provisions, then disallowance comes. Let me tell you practically. Sir, some professional fees is being paid, audit fee let us assume, 50,000 is being paid. Greater than 30,000, 10% TDS has to be deducted under new section 393. Old Income Tax Act 94J, New Income Tax Act 393. Now here comes deduction and then comes payment. Deduction has to be done in tax year itself. That means if it is the tax year 2026-27, when the payment is made on 1st May 2026, deduction should be done maximum by 31st March 27. Deduction in the sense, audit fee account debt are 50,000, to bank 45,000, to TDS payable 5,000. This TDS payable we have entered into a separate account, that is called as deduction. That deduction has to be done in tax year itself. Sir, here for late deduction 1% interest will be charged. Deduction actually when payment is done on 1st May, on 1st May itself a deduction entry also should be passed. If you deduct belatedly, then what happens? Interest 1%, not 1.5, 1% only. Late payment 1.5, next I will say. So, deduction should be done in tax year. Payment should be done maximum before filing return under section 263. Sir, actually in this case, since it was May TDS, when we need to make payment, by June 7th itself, challan has to be paid. If you are not paying by June 7th, it is a tax audit case, you have time up to 31st October 2026, not 26, 27. For this tax year, you have time up to 31st October 2027. By this date, if you make the payment, for this delay, you will have 1.5% per month interest or part thereof. But here if you see, by the you have time till this date. Before this date, if you make the payment, you can claim deduction in tax year 26-27 itself. So, two conditions were specified here. First condition is deduction has to be done in tax year itself. The deducted TDS should be paid before the due date of filing return of income. Both conditions should be satisfied. Deduction in the sense creating a liability. Creating a liability for TDS payable. I have said here no, to TDS payable. So, deduction has to be done in previous year itself, I mean tax year itself, but payment has to be done before the due date of filing return of income. Anything has been missed in this case, then what happens? 30% has to be disallowed. Tax not deducted, not paid, both has to be done. Deduction should be done during the previous year and payment has to be done before the due date of filing return under section 263. 30% will be disallowed. Sir, next year if they make payment, next year it will be allowed. In the year of payment you can claim. Let me continue. Next section 35, TDS default, non-residents. For non-residents, if you are not going to deduct TDS on making any payment, you are claiming that as expenditure, but you didn't deduct TDS nor paid. In this case, 100% disallowance. A company pays 5 lakhs royalty to US firm without deducting TDS, then entire 5 lakhs will be disallowed. Now, here comes the most interesting topic, partners remuneration and interest. In past session itself, we have discussed the limits. So, first 6 lakhs of book profit, they can claim 90% or minimum 3 lakhs. And balance 60% is eligible for remuneration. Partners interest 12% is eligible. And in order to claim this, in deed they need to execute this clause. If deed is not permitting remuneration interest, then nothing can be claimed. First, deed should permit this interest and remuneration. To this extent only we have to claim. Over and above this interest and remuneration, if interest is being paid 15%, then 3% will be added back. And one special thing here is salary paid to non-working partner is disallowed. Only to working partners only salary is permissible. And in partnership deed there must be an authorization. To sleeping partner, if that means who are not taking active part in business, to them if salary is paid, that will be disallowed. I have given some special points here which is useful for practice, very useful sir, because in books of account many of the persons might maintain separately capital account, current account, like that separately they might maintain. Loan account, partners loan account they will maintain. Sir, you say capital account, current account, loan account, to whom you are paying interest? To partner. Whenever you are paying interest to partner, this limit of 12% will get attracted. Anything paid in excess of 12% will be disallowed. Partners loan account you create, partners current account you create. Sir, even in partners current account can I pay interest? Your books, your wish, your partner, your business. Act is permitting, whatever may be the type of account, we will give 12% as deduction. And in case of LLPs, usually there will be contribution account and current account separately. Contribution nothing but capital, they don't disturb that contribution account. Whatever transactions are being done by partners, separately in current account they apportion. So, in case of LLP, if they maintain contribution and current accounts, now interest is permissible on contribution account or current accounts? Both. LLP we are not going to make any separately we are not treating here. Here also 12% simple interest is applicable. even it is current account. Sir, some partners have withdrawn in excess of their capital. Some partners have introduced capital. When they introduced capital, firm will pay interest to them. If they have drawn excess over their capital, they have to pay interest to the firm. Now, what has to be considered? Net amount only will be considered. Interest paid to partner, interest received from the partner, net amount only will be considered. If loan is given in a representative capacity, then these limits will not apply. Sir, what do you mean by the term representative capacity? Sir, here representative capacity means, I have given an example here. Mr. A is partner representing his HUF. Mr. A is not the partner of the firm. HUF is the partner of the firm. Now, if Mr. A gives 5 lakhs from his personal savings, now interest 12% will attract, limit of 12%, does it attract on 5 lakhs? Answer is no. If on this 5 lakhs 18% is paid, 18% is eligible, 12% cap will not be there, because he is a partner in representative capacity, whereas loan is given in personal capacity. Is it clear? Same in case of trustee also. If loan given in personal capacity, these limits will not apply. Here if you see, representative partner, funds also representative, then limit will apply. Representative partner, but funds introduced personally, then for personal funds, this 12% limit will not apply. Personal partner, personal funds, yes, limit applies. Personal partner, funds are representative, limit does not apply. Am I clear, sir? Whoever is the partner, that person only is going to introduce loans or any other thing, capital. For that only limit of 12% will apply. If it was done in different capacities, then limits will not apply. Next, association of person and body of individuals. Here, interest or salary, whatever is there, nothing will be allowed, because this is not a partnership firm. Here just an AOP, just a memorandum might be executed, but there will be no registration in this case. That's why this will be disallowed. Any interest, any remuneration they write, everything will be disallowed. Coming to the next, in TDS only, there are some special points here. Salaries payable outside India, compulsorily TDS has to be deducted. If you are claiming expenses in India, you have to deduct TDS. If you do not deduct, then entire expenditure will be disallowed. A company pays 10 lakh salary to an expert working in US, but fails to deduct TDS, it will be disallowed. Next, in order to understand these two, some basics we need to know. Will government pay income tax? Government is not a person at all, so government will not pay income tax. Will central government pay income tax? No. Government includes central government. Will state government pay income tax on collections from the public? Answer, no. Might be state government or central government. Government is not an SSE, not a person itself. But central government companies or state government companies in which government holds minimum 51% capital, whether these companies should pay income tax? Answer is yes. That companies are persons only. Company definition it was there. Company is included in person definition. Government need not pay income tax, but government companies need to pay income tax. Here, if there is any state government company, if it make any payments to state government as per their state laws, here profit will be reduced to the government company because some payments were made to state governments as per law. You say license fee or something, whatever may be. Here who is making the payment? State government company is making the payment to state government, which leads to reduction of profits, and on this profit income tax will be payable to which government? Central government. So state government company is writing expense and making payment to state government to reduce income tax payable to central government. This central government will not allow. That is what this special point. Not for our regular practice. Exclusively state government undertaking, if it is making royalty, license fees, service fees, to whom they are making payment? To state government only they are making payment. That cannot be claimed as deduction. A state-owned mining company makes privilege fee to state entities. It cannot be deducted. An amount apportioned from directly state government undertaking to state government. This one also cannot be claimed. A state power corporation is ordered by the state to transfer 50 crores to treasury. So among state government company is giving to state government, which will lead to reduction of taxes to central government. That's why this is not a deductible expenditure. This is nothing but distribution of profits to state government. Hope the concept is very clear. So we have completed till section 35. Now comes the next section, 36. Some more disallowances. So among which let us discuss one disallowance for this session, and there is one important rule, a limit of 10,000 cash rule, beyond which expense cannot be claimed, where say 10,000 is payment is made in a single day. But there are some exceptions which were specified here in rule 26. So that's why that things we will discuss in next session. But now in this session, let me conclude this one special point. Payment made to related parties. Business is done by proprietor, Mr. A, in which he has written salary to Mrs. A. Payment to relatives. We are not bothered regarding payment of salary. If she is working in your business, if she is helping in your business, you can write salary. But if that salary is excessive or unreasonable, comparing to the fair market value, comparing to the business need, and comparing to the benefit derived out of that salary, if it is excessive and unreasonable, a person working can be paid there, for example, based on fair market value 30,000. But if you are paying 3 lakhs per month, to reduce the profits only you are doing this one. You can make the payment to relative. Act is not saying that relative cannot be made payment. You can make the payment to relative. But if it was excessive and unreasonable, that we cannot tolerate. That excessive payments will be disallowed. A company pays to director's son in a job. Since director's son is doing job in our company, we can make salary payment to him. But usually 50,000 job, 2 lakhs we are paying to him. That excess 1,50,000 will be disallowed. That is what has been specified here. Relative definition is given here. Any director, relatives of individuals. Relative definition also will come in other sources, gift provisions. Directors will be treated as relatives. Directors' relatives also will be treated as relative to the company. Or a shareholder who is holding substantial interest, 20% shareholding, will also be treated as relatives. To that shareholder, any payment is made. If he is a supplier, to him we are making purchase payment. That purchase over and above market value, if we are making payment, that will be disallowed. Officer is not saying that payment to relative will be disallowed. Payment made to relative which is excessive and unreasonable will be disallowed. So, balance aspects, this 10,000 limit and all we will discuss in further session. But here some queries were being raised regarding the session. Some queries were being raised. Let me clarify those queries. Here some queries were being raised regarding the session. So let us discuss those queries now. So coming to first queries were already been dealt in session itself. From here I need to discuss. So if as company, if we pay Amazon gift, voucher to sale vendor or employee, please share tax liability. Sir, Amazon gift vouchers which you are giving to your vendors is nothing but a perk visit. In our hands we can claim expenditure, but in the vendor hands this will be taxable. That is why we have to deduct TDS under 194R and in New Act 393. Whenever it exceeds about 20,000, you deduct TDS. Next, payment of remuneration to non-working partner is mentioned in partnership deed. Is it allowed? Answer, no. First of all, he has to be a working partner, not managing partner, not only managing partner. He has to be a working partner first. So, for non-working partner, even you mention in the deed is permitting, but act is not permitting. You cannot claim deduction there. Because he contributed in floating and some R&D has also been done by him. If you are doing some R&D, it is nothing but part of the activity. In such case, if it is part of the activity, then he will be treated as working partner only. You can treat him. No sir, he is not treated as working partner, then we cannot claim deduction. Next, in existing deed, we have kept 40B clause for remuneration and interest. Is it sufficient? Yes, enough. Percentage of 12% based on book profits. Okay, what here specifying is 40B clause is written in existing deed. Now, new income tax act has come, no? Again, all the deeds should be amended, no need. Repeal and savings, section 536, which we have discussed in first session. So, even though you have mentioned section 40B in earlier partnership deeds, that need not be amended now. Now section is changed now. Section 35 has come now. Even though section changed, you need not worry. For a new deed which you are executing from 1st April 2026 onwards, their new section has to be presented. For all the old partnership deeds, they need not be amended. Repeal and savings. If we book ticket for foreign travel, pay to travel agent, as company need to deduct TDS. Yes, 194C. Each payment 30,000 excess, aggregate 1 lakh, you need to deduct TDS. And next, some more queries were there. If vendor gives lower tax deduction certificate, yeah, it's an exception. So, which we will discuss in TDS. Any lower deduction certificate is given, then TDS need not be deducted. How to deal with the difference in 26 AS and AS? Yeah, that's what we will discuss in at the time of tax audit. A separate discussion is there. Day after tomorrow might be the session. Tomorrow also there are some more deductions for discussion. So that will get completed. That next day we will have a discussion on tax audits, their reconciliation and all I will explain. So by this all the queries which were being raised are also been dealt. So we will continue the balance deductions with 10,000 limits and all in next sessions. Thank you very much. And one more query, if you have old TDS demand in traces for 10 years, now what we have to do, they have been asked here. So I will discuss our TDS chapter, everything will be discussed. By 31st March, old demands have to be cleared. You cannot file revised returns later. After this 31st March, only 2 years returns only can be revised, TDS returns. So past demands now only you rectify, or else you should be ready to make the payment.